Okay, let me start the webinar. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So you know what is happening in the market because of the British exit poll. The counting is going on, but as it is in favor of the Britain exiting, so automatically you come across the free fall in the market. So during this Asian session live market analysis and the forecast webinar, I'm going to review the forecast, what I have given it this week. And today we are on 24th. And let us see how exactly we have performed with regard to the forecast. And also in such a situation, how exactly the trading strategy is helping us to limit the risk and maximize the profit. So there are three components in my trading system, namely the derived forecast and fine-tuning of the forecast using the market trading technique. We note down the initial lows of the highs around 3:30 GMT and find out what the players intend to do. And we don't simply go with that of the market sentiment straight. And also, to limit the risk, we use always the hedge orders to limit the risk once the position is taken until we are able to keep stop at entry in the buy position, and then subsequently we remove the hedge order. In the event if the hedge is filled and the hedging is making loss for 30 minutes, we close the hedge and keep another hedge order and wait for the market to go up to keep stop at entry in the buy position. But in the event if the hedging is making profit for 30 minutes, we understand the market has reversed. So immediately we either close our buy position and maximize the profit on the sell position, or simply keep stop at entry in the sell side and wait for the market to make any sort of move, whatever it wants. And in the event, if you find that market may not recover, you can simply accept the loss of 30 pips, close the buy position with the sell, and be with that. So that we need not confuse with regard to the positions. Already the loss is blocked, and we can realize the loss similar to that of trading with a stop. So these are all the advantages of trading strategy. And also a day like this, it is extremely difficult for anybody to guess what sort of move the players are going to make, and also to capture profit, because the fear is the enemy for that of the traders. And because of that, and you know, the traders make mistakes in while trading. And this is a forecast, and it was making all the rises. And also yesterday during the European session they made the rise, and during the US session they made the slide, and they have been holding in the middle level. And today they are expected to make the swing and rise move. But what has happened? There was a deep fall during start because of the outcome of the exit poll, and as a result you find that market has made the extreme net change. And you know, in the case of euro, the permissible net change in a week is about 350 pips. They have already done about 400 to 500 pips, and then they have started recovering here. And in the case of USD the permissible limit is 450 pips, and they have done it almost close to that, and 500 plus, and then they are done up to 472 now. And in the case of GBP, the weekly limit is 600 pips, and the monthly limit is 1600. And they had done 1600 for the entire monthly limit because of want of liquidity, and now they have started recovering. And we have to keep in mind that these are all nothing but the knee-jerk reactions. The players make it in such a way so that the traders and also the funds holding GBP positions, they will liquidate and think that they have to jump to that of the safe haven. One of the safe haven is US dollar, the other one is USD, then also gold. That is how they just parked all the money into that of the safe haven. And then you find that if they keep the money there, they cannot earn anything. and then they will come back to the other market again, because such a huge investments, nobody will be able to accept and pay overnight interest for that. So unless and otherwise they're deployed in the market, they are not going to earn. So ultimately, we have to keep it in mind. These are all nothing but the knee-jerk reactions. The players make it, and there are several occasions during which time they have done it like this. And this sort of move, they have done it up to 2003. So from 1997 to 2003, I have been observing the market moves, and suddenly, whenever a data release happen or an event comes in, they make about 500 to 700 pips swing. And I have seen the swings up to 900 and 1100 pips in the case of GBP also. So they were doing it, and subsequently in 2003 they were being regulated, and they put the cap on a daily, weekly, and monthly limits. And occasionally, whenever there is a liquidity crisis, they used to relax it. The exchange used to relax it. As a result, we come across that the net change increases. And today is one such occasion wherein the liquidity was the biggest problem. Because of that, any level people want to exit of the GBP position, and players are kept easily at the lowest level the buy orders, and we got it filled. So they gained the level very quickly to 1.50, hit all the stops from that of 1.4950 and above, about that of the short sellers, and then start making the draw. So either way, they just punish the traders. It is not that the buy and sell traders have lost and the sell and buy traders have made a fortune, because the players have seen that nobody makes money in such crisis situation. Now you come across, slowly they are gaining the level. Let us see how exactly they have done the market trading part of it. So the extreme levels, they have shown it. So obviously nobody will be able to imagine and calculate all those levels, which are phenomenally low from that of the mathematically estimated levels. So all these estimates have gone wrong because of the knee-jerk reactions. Now with regard to the market trading, so we need to find out what is going to happen in this market from the current situation. And you know that the exit poll results. So here you come across, I just searched it in Google. So I got the latest information that to remain in Euro, 48.3%, and just to leave European Union is 51.7%. 96.9% have been calculated. So it shows that the exit is the mandate. So how exactly the players are going to make moves in the market? Now by 3:30 GMT, Euro formed the low 1.0999, and then subsequently it has come below to 1.0913, still holding below that from 3:30. So we have to find out by 5:30, 2 hours, if Euro does not go above 1.10 or almost close to 1.0999, that means there could be further sell-off during this day. That means the players have just exited out of the market, and they do not want to give support to the other market. So there will be a crisis, and probably the exchange might close the market. That sort of scenario might happen. We have to wait and watch. Then in the case of GBP, 1.3466 was the low they have set it, and came down to 1.3231 in a knee-jerk reaction for the downward move, and it has come up to that 1.34. It has to go above 1.3466 and stay there for more than 30 minutes in order to gain further levels. Otherwise, there could be further sell-off. And because this being Friday, then the exchange might allow people to exit out of the positions. Afterwards, they need to see what could be the possibility. And are they not going to deal with GBP? We have to find out. Or GBP has become a regional currency? We have to find out. Instead of the international tradable currency, I don't think they will let it down like that. And already you come across that euro was formed. Before that, there were several currencies like the German's Deutschmark, Italian liro, and all those things. And then subsequently, when all are merged, the number of currencies to be traded has come down drastically as the majors. Because the majors are vital in the market in order to determine, and their economic conditions are to be used as trigger points, then the players can make moves. The regional currencies, obviously the volume will be very less, and that will be locally operated. It may not happen at the international level. So when the number of currencies come down, then the charm in the market might be lost. So we have to keep in mind how the players are going to do it, and all the markets are structured in such a way so that the traders from different countries participate and trade. So that is how we come across the commodity pairs. For example, they were traded only in commodity market earlier. And in order to have more liquidity and more participation from the other traders, they made it online, and they just incorporated commodities also into the online, along with the currency market. And also the stocks are also included along with the currency market. Now you find that futures and options of the stocks also trade 24 hours. So basically, the market makers or the banks, they make it as 24 hours market as much as possible so that they will be able to get the liquidity. And also the banks, they need to participate in the market to earn money. Then only they will be able to pay interest when you give the money as deposit. They cannot lend all the money to the borrowers and wait for the borrowers to pay the interest and then give it to the customers. They have to deploy it in the market. So there are various markets wherein they deploy the money. So now the current knee-jerk reaction is just a reaction to that of the poll. Then subsequently how they are going to give an interpretation pertaining to that, we need to see. And they may say that GBP could stay as the international currency, and that could give an impact in the market. Anyways, have you written a book on this? No, sir, I have not written a book, but I have given the webinar in FX Street in 2010, a series of 10 webinars as my trading system. And if we happen to listen to those webinars, you'll be able to get all these concepts. And basically, these are all unwritten informations. So what you study in theory is with regard to the banking norms, banking rules, etc. But how the banks are interacting among themselves, it is a secret. And nobody is allowed to write a book on such informations. So you know very well that we deposit the money and withdraw the money from another bank. But once you deposit the money in one place, and how we are able to withdraw the money from another place, and how they are able to give it without charging any service charge. So those things you might be wondering. And so how exactly they are making money on that. And also you find that if you deposit money in the bank, and you might presume that it might be physically lying there. It is not like that. It will be put in the pool, and that is used to deploy in the market. So there are other inside informations which cannot be openly discussed. But I am briefly touching upon here for the traders to understand that how the instruments are needed for the market to operate. They cannot just like that close the instrument, just like that, just remove GBP from the top. The international currency status just because of exit voting. So we have to understand whatever the currency which is trading against that of the US dollar, and those currencies you come across, they are categorized as the majors, commodity pairs, and the regional currencies. The regional currencies are in the respective countries traded against US dollar, and the market is pertaining to that regional situations. Whereas these are the international currency, and US dollar is considered as a universal currency. And so that means universally we'll be able to convert US dollar into any other currency because the exchange rates are available. And similarly, Euro and GBP are also of the same status where anywhere you will be able to exchange it. Other regional currencies you may not be able to. If you are in a small country and you take that currency to the international market and say that I want to exchange, they will simply say that go to your country and exchange it, not here. So you have to understand how exactly the currencies gain the status. GBP, being the oldest currency, has gained the status as the major. And also Euro gained as the major because it is the combination of all the other European currencies. And that is why you come across Euro is in the numerator and GBP is in the numerator, Australian dollar is in the numerator, and US dollar in the denominator, because they were all the currencies, they were very popular before the US dollar has become universally acceptable currency. Whereas Japanese yen and Swiss franc, no, all other currencies, European currencies have joined and become Euro, but Switzerland continue to keep it. And one of the reasons is that they wanted the currency to be tradable. And you find USD is still there. The country size is so small, but still it is traded as a major. But it becomes the denominator. So we need to understand that numerator status is gained by GBP because it is being one of the oldest currency. And you know that Great Britain was ruling most of the countries in the world. And because of that, it gained the status, even though not now. So they may not just like that lose the status, and BOE might fight for it. Now, coming to that of the market reading, you find 1.3466 was the low. They are still holding below it, and we need to see after about, so 3:30 they set it, and we have to find up to 5:30 GMT. If it is not coming above 1.3466, then further sell-off might happen during that of the European session. So don't be in a hurry to take the position. We can continue to do the bottom fishing, and there is not a difficulty at all. And only thing is, if you are hedged with the buy positions, you simply keep stop at entry in the hedge and wait for the market to turn around. And also you could come across, today being Friday, there could be a short covering move, because those who have taken the short after the drop might come to buy back against that of the market, and in order to close their positions to gain profit, and they do not want to hold it or keep it over weekend. And also on Monday, you come across the month end time. So Monday onwards, you come across the week wherein the month gets over and the new month starts. The players are expected to make very aggressive move, very similar to what they have done it now. So people might call it as a relief rally or whatever it is, and there could be some policy decisions, etc. And this British exit is not going to come immediately from today. It will take time. So definitely the players will try to make whips or moves, and that is the way they earned huge profits from the other market. Now in the case of CHF, 95.57 is the low and it's intact, and 98.03 is the high. I forgot to update it. Sorry, 98.03 is there, but 97.32 is the initial high, and they have just gone up to 98 and come below that. So which indicates that they are likely to reverse the market during the European session. Then in the case of Canadian dollar, 1.2714 is the low, 1.31 is the high, and they went above that of 1.3009 and come below that. Oh, sorry, still it is above 1.3085, so slightly it is closer to that other high, and they are expected to make a move similar to that of USD CHF on the downside, because once everybody taken the sell position, and if they hold, the players are the one, they just drop and buy, drop and buy, drop and buy against their sells. And then after buying everything, they know very well the short sellers will be there in the market. And there are many who would have taken the sell position after the drop. So when they quickly gain the level, automatically they will come for the short covering, even though they would have seen the profit. But if they fail to keep stop at entry and wait as they wish, without a stop at entry, if they wait, suddenly they can bring in a reaction, even somebody's speak or any other reaction, they can simply give a knee-jerk reaction in the market and show the loss. So always keep in mind, using the hedge will limit the risk, and also it will give time for us to take appropriate decision. Then in the case of Australian dollar, 0.7310 was the initial low, and they just came down by 3 pips and started coming up. So here also you come across that Aussie has come below that of the initial low and come above and holding. So we have to watch carefully CHF and Aussie and see how exactly the players are going to silently reverse the market, because either way moves only they are able to make money from that other market, and they always depend on that. They don't make all the drop and keep quiet, because they cannot exit out of the markets. They have to keep deployed the money in the market. Okay, Jason, the shift in trading zone is still valid? Yes, the shift in trading zone is still valid, and this is only a reaction for that of the British exit fall, and they come down all the way on the downside. And you know that they make such extended downward stop-ins and then bring in the rally on the opposite side, which normally we call it as a relief rally in the market. And then the players are expected to earn huge money only when they get give the investors the confidence. They can attract the investors. And you know that in 2008 and 2009, we come across the multi-year trend reversal happened in the market during that of the previous US election time. At the time, there was a decimal drop. There was a huge rise in the case of Euro and GBP, and from there they made a huge phenomenal drop. Euro went up to 1.60 and came down to 1.06 in a matter of 2 months. And GBP went up to 2.11 and came down to 1.34 in a matter of 2 months. So this is not something new for us, this sort of moves in the market. Then afterwards, how they recovered the market. So we have to wait calmly, and we should not think that the players have exited the market, so there won't be any market at all. It is not like that. They will quickly gain the levels and give some stories so that people will be able to understand that, okay, market is tradable. They might find the value in certain currencies to pick up, and then later on they are expected to give the profit. And also you come across some people might be interested in doing bottom fishing. So they are also, so especially when they buy physical currency, when it is at the lowest level, they are going to be benefited. And only leverage trade, we need to use the stop. Otherwise, physical currency, you can physically take delivery of the currency and hold it. Definitely will come across the market is going to perform and give profit for that. So especially during crisis time, the bottom fishing happens only among the traders who know the market cycle. Then when do they come in and buy monthly pivot? See, as far as the technical things are concerned, it all depends upon the market moves. So now they have created the fear. Now the European session has to start. And how exactly the European people are going to react for that, we need to see. Because all other international people might liquidate GBP position. And if they want to really support GBP, then the UK people should come forward to buy GBP. And also similarly, the European Union, there should be a buying interest in euro. Only when they show interest in the respective currencies, all others will show that interest. That is why you come across invariably the interventions in the market. And suddenly when the currency becomes very strong or weak, their nodal banks intervene in the market and then give the appropriate moves. And here you come across that when euro and GBP are dropping, USDN has also dropped to 99. And those of you who would have not watched how exactly it formed, there was absolutely from 101 to 99.03, there was no trade. And quickly it was shown in a fraction of a second, and suddenly it went up to 101.80. So that is how the intervention would have happened by that of the BOJ. And subsequently they are holding it because still the market sentiment is not being established. So they have to see the outcome of the exit, British exit, and the people should digest the news, and then later on the players will make their moves. And the players are here to stay, so don't be afraid that how exactly the markets are going to react. So as far as the market reading is concerned, they are holding Euro GBP below that of the initial lows, which is set around 3:30 GMT. So they are likely to hold low or make for the drop during start of the European session and then start recovering the market. But we have to follow Australian dollar, how exactly it is holding above 0.7310 for the late Japanese and the start of the European session. And the start of the European session, when it is not breached 73.10, that means the players have decided to reverse the market during the European session. And that you can see, and probably they will just gain back all the last level in order to induce the short sellers to go in for the short covering. And that we call it as a relief rally. And afterwards, they might let loose the market during the US session. Before the weekend, they may not commit huge positions. They will simply buy back against their sells and let the market to settle down. So then Monday onwards, they will bring in the new moves in the market. So I'm not recommending any trade at the moment. And these are all the market timings. So you can note down that during that of the 7 to 7:30 GMT is a gap time. And that move is a false move. We'll be able to understand what they are going to do. And that will tell us what is going to be the reaction during the early European session. Probably they may revisit, if needed, the low during start as a just knee-jerk reaction, so that the institutions holding buy positions might find that it is very risky to hold. They will liquidate the positions, and then later on they just gain back the levels. Then others will become surprised. Then Fred. So when do they come in and buy? Okay. How can we learn what you are teaching? Probably if you have any friend who is in the treasury operations in the bank currently, and if he is willing to disclose the truth, you might be able to learn it. There is no book pertaining to that. These are all unwritten information, and They are all practiced by that of the bankers. And probably you know that if you visit any bank, even though you are a relative to that of the bank dealer who is sitting in the treasury room, you are not permitted to go inside. It's a restricted area. And all communications to that man will be recorded. That is how it is. So I'll come back on Monday as far as the Asian session live market analysis is concerned. And yesterday I gave a spike trade call with regard to UK EU referendum. So now we know the results. I'm going to come back by 8 GMT and take about 40 minutes to explain the outcome of it. At that time, we'll get more clarity during that of the early part of the European session. Then probably I'll try to give some trade recommendations, and that we can make use of it in order to earn money. But still, I insist that you trade with the hedge order to limit the risk and then maximize the profit using a trailing stop in profit making position. If there are any questions, you can ask me. I'll answer those questions. Otherwise, you can come back by 8 GMT, and during the spike trade call post UK referendum webinar, you can ask me the question. Okay, I take this opportunity to thank FX Trade for the facilities provided to present the webinar. I'll again give another webinar by 8 GMT as a spike trade call, and please do join, and so that you will be able to understand how exactly the UK people are reacting to that of the Europe and the UK are reacting to that of the exit poll outcome. Wish you all the best in your trades. See you by 8 GMT.